It's almost every week now that you see news about China taking over the US or BRICS becoming the new economic leader. Yet, capital keeps circling back to the US and it remains, till this day, the world's largest economy since the 1890s, almost 13 decades ago. This is not because everyone decided that the US is the best, but it's the compounding of capitalism, innovation, liquidity, trust, and a reserve currency wrapped into one giant system. If you're still 50-50 about investing your money in the US market, this research-packed video is made just for you. From an economic perspective, the US remains the world's largest economy in 2025. Its GDP hits $30.51 trillion, surpassing other superpowers such as China's $19.23 trillion and Europe's combined $27.87 trillion, and that's 43 countries combined. And just to give you an idea, $30.51 trillion GDP means the US alone is responsible for over 26% of global output. Yes, 1/4 of the whole world's output. And of course, when we talk about a country's economy, we need to look at their stock market as well. And let me tell you, it's even crazier. As of the first half of 2025, the New York Stock Exchange and the Nasdaq account for almost 50% of global stock market capitalization. That means the US commands over half the value of the global stock market. But as they say, size doesn't mean anything if you can't perform, right? So let's look at the MSCI All Country World Index, the ACWI, a global equity index that measures the equity performance in both the developed and emerging markets. To no surprise, 9 out of 10 top companies based on market cap are from the US, and they are mostly from the tech sector. And historically, the overall US stocks have delivered solid returns with the S&P 500, which is an index that tracks 500 of the largest companies in the country. They recorded an annualized return of 16.9% for the last 10 years, taking the seat of first place again. And to put it in perspective, if you invested $10,000 in the S&P 500 in 2015 and do nothing afterwards, it will be worth almost $50,000 today. And that's 5x in 10 years. So the bigger question here is, how did the US achieve all of this? But before that, I would like to give a huge shout out to the sponsor of this video, Webull Malaysia, a trusted stockbroker that is licensed and regulated in Malaysia. They are currently giving out free shares until the end of October 2025. And by just opening an account without depositing any money, you will immediately get a 50 ringgit trading voucher. And then, if you deposit an accumulative of 500 ringgit, you get 100 ringgit worth of NVIDIA shares. If you want even more free shares, continue the deposit until 5,000 ringgit plus maintaining that amount for 30 days, you get another 400 ringgit worth of NVIDIA shares. So in total, with just 5,000 ringgit deposited, this 550 ringgit is what you will get, and that's equal to an easy and instant 11% return. If you ask me, you really wouldn't want to miss this. And just FYI, these rewards are exclusive for my followers, so remember to use my invitation code Z888, that's Z888, and I'll also drop my link down below for you together with the latest promotion. Now, to fully appreciate the strength of the US economy, it's important for you to understand how different economies around the globe work. Trust me, it will be worth your time. And the most widely used ones are these three: capitalism used by the US, communism by North Korea, and socialism by China, or a mix of these. And well, you see, capitalism is basically an economic system where private individuals or businesses own capital goods. Basically, the free market controls the production of goods and services with very minimal government ownership or interference. And now, unlike communism and socialism, the citizens under capitalism will have a stronger drive to work and innovate because they get to benefit from their success instead of having it controlled by the government. And well, other than the most usual taxes lah. And let me tell you, this kind of competitive environment sparks entrepreneurship and innovation in the US like nowhere else. And if you go into the official website of the New York Stock Exchange, you would immediately see that it says NYSE is capitalism at its best. They are exactly what they claim to be, and that explains why a lot of growth happens over there. And because of the capitalistic environment, the US also ranks number 6 in the world for ease of doing business due to how conducive the local regulatory environment is for starting and running a business. And let me give you a recent example. Texas has been one of the states in the US with the largest number of listings in the New York Stock Exchange, and this is because of their pro-business environment with things like tax incentives, financing, grants, and so on. And all this makes Texas the perfect place to start a business. And even Tesla moved from California to Texas to avoid California's raging tax. And because of that, the New York Stock Exchange has launched a new fully electronic equities exchange in Dallas called the New York Stock Exchange Texas in 2025. I mean, not just Texas, but overall starting a company in the US can have significantly lower barrier as compared to the rest of the world. And that helps explain a bit on why their initial public offerings, IPOs, are booming as well. In Q2 2025 alone, there are a total of 50 IPOs in the US, and in 2024, the US commands the highest market value in the world when it comes to IPO. But here's the thing, not all are homegrown US companies. As of today, among the more than 530 international companies listed in the New York Stock Exchange, you have some of the famous companies like Zeekr from China and also Birkenstock from Germany. And as for Nasdaq, the recent famous ones include Chargy from China and also our local hero, Grab. They are also publicly listed on Nasdaq since 2021 to allow them to tap into a larger investor base. And if you notice, the technology, media and telecommunications, the TMT sector is leading the IPO, and that brings me to my next point. The US is leading in tech and innovation, and these include sectors like AI, EVs, electric vehicles, semiconductors, or space exploration. I mean, take a look at QQQ, a tech-heavy ETF that tracks the 100 largest non-financial companies. It has been recording very healthy double-digit returns for year-to-date, 3-year, 5-year, and even 15-year timeline. And giants under these ETFs like NVIDIA, Microsoft, Apple, and Tesla aren't just another US company. They are also global innovation hubs that also have sales, operations, and investments all over the globe. I mean, take NVIDIA for example. When we look at their revenue by geography, you can see that actually more than 50% of their revenue comes from outside the US. So when you invest in many of these US companies, you are actually investing in different parts of the world as well. And speaking of which, one very underrated factor that allowed the US to hold their crown for so long is their intellectual properties, short for IP, for which they have long been a leader of, covering patents, trademarks, copyrights, and trade secrets. I mean, in this sense, innovators, creators, artists, and businesses in the US are very well protected. And that also means that innovators can retain the exclusive right to make money from their hard work. And all of that innovation and IP obviously require a controlled and well-regulated environment to make sure things don't go haywire in the process, which the US has this covered with their Securities and Exchange Commission, the SEC, which aims to protect against market manipulation and promote market efficiency, integrity, and investor protection. And they are taking their job seriously. I mean, just look at how they manage the investor frauds over the years, like the Nikola and also the Theranos scandal. It didn't take really long before their founders went behind bars, something usually unheard of in many other small markets. And because of all this regulation and protection, it will eventually attract more FDI, venture capital, and also private equity into the US, which explains why the US continues to lead as a top destination for inward FDI since 2017. And today, it's still way ahead of the others. Now, when you invest in any economy, you are also indirectly invested in their country's currency strength. Malaysia Ringgit in Bursa Malaysia, Sing Dollar in Singapore Exchange, and US Dollar in the New York Stock Exchange. You get my point. One measure of confidence in a currency is no other than foreign exchange reserves. So FYI, most of the central banks around the world, like Bank Negara in Malaysia, will store assets denominated in a foreign currency to make sure the country has backup funds in case their national currency devalues or become quote-unquote useless. And since the end of World War II, the US dollar has always been the world's reserve currency. In 2024, the dollar took up about 58% of total official FX reserves, far above the euro at around 20%, Japanese yen at around 6%, and British pound at around 5%. Meanwhile, the Chinese renminbi remained at a low single digits of 2%. And this indicates a strong widespread confidence in the dollar, as it is not only the world reserve currency, but it's also the most widely used currency for international trade and transactions. In fact, around 50% of international payments are made in US dollars. Even when you check commodity prices like energy and oil, you'll notice almost all the prices are denominated in US dollar, which further reinforces the dollar's network effects across trade and also finance. And when the world panics like during a recession, investors also flee to dollars as their safe haven. And this can be seen from a chart called DXY, or we call it DXY. It assesses the strength of the dollar against a basket of major currencies. And from here, you can see that the dollar strengthened significantly during the 2008 Great Financial Crisis, as well as during the 2020 peak COVID fear. Because when all hell breaks loose in the world, investors like to keep their money in a safe haven, and it often means the US dollar. Now, if you think the US dollar being stable and being the dominant reserve currency has nothing to do with your US stock investing, think again. For foreign investors like you and me, this means lower currency risk and greater stability for our overall portfolio when we hold US assets. And that, my friend, is what makes investing in the US even more attractive to all of us. By the way, I realize more than 80% of you watching this video are not subscribed to this channel yet. Making these videos takes a lot of effort and time, so if you enjoy these videos, you help my team and I a lot by just clicking the subscribe button down below. We promise to deliver more and better research videos for you in the future. Now, I'm not done yet. The US stock market is also attractive because of its liquidity, which I can confidently say that almost no other market comes close to that of the US market. And liquidity here basically refers to how easily stocks can be bought and sold without affecting the price too much. For example, if a market is crowded with buyers and sellers, it is relatively easier for you to sell your goods at market price as opposed to a slow or empty market, unless you sell it at a bargain. So in the stock market, we call this the bid and ask price. When trading volume is higher, aka more traders in the market, the bid and ask spread will usually be smaller. And when that happens, investors are generally more confident too, because they can sell their investment quickly without compromising on the price while preventing huge price swings from the small orders. And with that, prices will be more stable and less prone to market manipulation. Now, if we compare the liquidity of the US stock market with the rest of the world using the total value traded, we can see from this graph that America almost consistently beats the APEC and the EMEA region. I mean, yes, America here includes other countries outside of the US as well. So here is a separate table that I sorted through individual stock exchanges, and to no surprise again, the New York Stock Exchange and Nasdaq top the list, indicating a deeper and more active market capable of handling larger transactions. And my friend, that just confirms their position as the most liquid stock market in the world. And to top it all off, the US comes with a world-class education system that's home to top universities like the MIT, Stanford and Harvard that produces a highly skilled workforce and even CEOs all around the world. You see, the US not only produces talents, but the supportive environment also attracts top minds from all over the world, and this diverse demographic plays a significant role in their economy as well. Study shows that almost 2/3 of US billion-dollar companies are actually founded by immigrants. I mean, NVIDIA's Jensen Huang, or Microsoft's Satya Nadella, or Google's Sundar Pichai, they are the CEOs of some of the largest companies in the world. And you couple them with teams, especially top management, made up of people from different cultures and backgrounds. They can understand local markets better, spot new consumer trends faster, and adapt their products to fit different parts of the world. And this diversity helps them scale globally better because they are not just thinking from one single cultural perspective. But of course, having said all of this, the US is not totally bulletproof. They have their own challenges as well, like their recent policy uncertainties and the risk of de-dollarization threatened by the BRICS nation, which is something that I will cover in a separate video if there's enough requests for it in the comments down below. And despite these flaws, I would say the US remains the safest bet and first choice for many investors. Because, my friend, their resilience is not built overnight. It's built on centuries of economic leadership, financial strength, and investor trust, coupled with continuous innovation. Well, choosing a market to invest in is like choosing a shopping mall for your weekend. Think again, would you prefer a shopping mall like Mid-Valley with more shops, product options, and shoppers? Or a small neighborhood mall with lots of closed shops and barely anyone shopping there? Chances are Mid-Valley would be the better option over the long run. In this case, the US stock market. Thanks for watching.